And we're live on YouTube, and just put the link in the chat.
Can you give me, oh, so this is the YouTube. Okay. Hello, everyone. Welcome to the third of the 4-day live trade event execution webinar series subtitled How to Capitalize on Monster Moves. And today I really banged it on some monster moves. My name is Mark Shawson, the pattern trader. So my heart is still kind of like palpitating. So who of you remembers on Monday, when we started this webinar 2 days ago, when the market was going straight up and I said, be careful, don't chase this market higher? Does anyone remember that? You know, I said I was very skeptical of this market. I was very skeptical. So Tyrone says yes, Steve says yes, Douglas, John, Ahmed, John. So this is, right, so I kind of titled this How to Capitalize on Monster Moves in the Markets. And I should also, include something, how to avoid the market traps. And this was a giant suckering of one of the biggest magnitudes. So what we're seeing right now, you can see right at the bottom of my screen, then atom bomb just went off in the financial markets. So you can see that Facebook closed the session just 30 minutes ago at $323. And this is not a typo. It's now trading $73 lower. It just announced earnings. It obviously missed earnings. And now the markets are plummeting. And here, let me kind of give you another snapshot here, show you what this looks like in the aftermarket. So that is the NASDAQ. So all day today, and I'm going to show you, I was shorting the NASDAQ, even though it was going higher the whole day. My heart was in my throat the whole day. The whole day it went higher. And then all of a sudden from nowhere, that's what happened. But to my mind, it's not from nowhere. To my mind, the bigger patterns showed me that this was going to happen. Where it comes from, what the outlier is, we never know that. But this is what's happened in the NASDAQ right now. And I am short up the wazoo in all kinds of instruments and bets that we would have a decline in the markets. So here are all of my bets. I'm long the 200. I'm long 200 of the 364 QQQs, and now we're trading at 361.80. So I'm 200 in the money on that. I've also bought the 365 puts, the 360s. I bought the 201. Oh, the IWM. Okay, so the IWM is the small cap. I bought some puts on the small cap, and then I've been loading up on the puts in IGV. I have 300 of these bad boys at the 310s. I bought some 335s today. I also bought the 340s. And you can see all the way down here, I kind of did this as a joke like 2 days ago. I bought 10 of these Facebook put options. I paid whatever, $4,000, and now they're worth $50,000. So 4,000 is going to 50,000 if the market opens where it is right now. So all told, I'm probably making $300,000–400,000 on these bets. And I'm also making a few shekels in the FX market. I told you the pound New Zealand was a buy on a bounce. We're making new highs. And you can see I have all kinds of bets on the stock market here, which has not been reflected in the aftermarket. So this will be a lot higher, on tomorrow's opening. So this is what I was talking about all week. Don't chase these things. I felt like it was a trap. Why? I mean, so you can see that this is the IWM, the small cap. We had a reversal today, so I just bought some puts, and I expect that it's going to open a whole lot lower. So what I've been looking at, and I've been, started out on Monday talking about this. It's disappeared. There it is. This thing called the IGV. Now, this to me has been kind of, I look at all kinds of different charts to get all kinds of different pictures, because if you look at the S&P, it looks one way, the Dow looks another way, what have you. And to me, I've been telling our members for many, many weeks now that this chart is a preview of coming attractions, meaning what we see here is likely going to be a spillover in the market. So this is the IGV. This is a ETF, an exchange traded fund. It's like a mutual fund, which includes stocks like Intuit and Salesforce and Microsoft and all the tech stocks. And to me, tech is what led this thing up, and tech's probably going to what, leads this thing down. And so you can see that all this week, since I met you on Monday, we've been rallying straight up. Now, when you're in the throes of this thing, and if you're looking at this on a 15-minute chart, when you have a rally from 320 to 360, that is just a monster rally. The S&P rallied 8% in the last 3 days that we've been talking. And so we've seen just a monster rally. So when you're looking at this thing, especially on so this is a weekly chart, which means that each one of these price bars represents 1 week in time. It's not a 10-minute chart, an hour chart, a short-term chart that most traders are looking at. So when you're looking at this on a short-term chart, this thing looks like it's going straight up. And this is why I say you have to understand the cards you're holding. Because if you don't understand why tomorrow this thing's going to be down here. Where did that come from? And I said that on Monday. I said, this is going to come out of the sky and bite you in the butt if you chase this thing. Now, I didn't know when it was going to end or how it was going to end or why it was going to end. But to me, this pattern told me this rally, was going to end, that this thing is going lower. Now, how did I know that? I didn't know Facebook's earnings. I didn't know how the market was going to react. And so you can see when we cut through the neckline, and the neckline is simply a line drawn through the pattern right there, that indicated that this was a bear price pattern that was confirmed, a market that has gone from an upswing to now something that's likely to go lower. And all we did this week was re-challenge the breakout area. So sometimes you get a breakout, you re-challenge that breakout. We almost came back to it perfectly. I said we could come back to 361. We went to, 358 today. And now we're likely going to go lower. And I can tell you where this thing is going to go right now. And, it's not magic. It's just understanding how these patterns work. So for those of you who are new or just hopping on for the first time, what I do is I look at price action and price patterns in the market. I don't look at news. I don't look at what the Fed's saying. I don't look at, Google opened up at all-time highs today. I don't look at any of that. I look at a picture and I make risk reward determinations. And what this picture is telling me is that there's an extremely bearish price action on this tech thing. It looks like a man or woman's left shoulder. The peak is the head, and that's the right shoulder. Now, you'll also notice that this neckline, this line drawn through the pattern, is downsloping. In a conventional head and shoulders pattern, we would see the neckline looking somewhat horizontal. But you can see that this is downsloping. Why is it downsloping? Because the right shoulder is sitting below the left. So it creates this downsloping neckline. So what this tells me is that not only is this bearish, but that we're likely to go down very hard out of this formation. So despite the fact that all this week we've been rallying, I've been buying put options. Every time this rallies, I buy more puts. And today was hard because, this thing closed right on the high before it collapsed. And, it's hard to do, but if you understand the pattern will get you to your destination. You have to trust the pattern. So all during this rally, I've been selling puts all through here on the Qs, on the IWMs, on the IGVs. I've been buying put options, which is a leverage bet on the downside in whatever you're looking at. Now, in addition to this head and shoulders bear price pattern, you have another very bearish price pattern in the form of this ascending broadening triangle. And this is what gold looks like right now, where all through the pattern, prices go higher. It starts out in the pattern narrow and then widens or broadens at the top. So this is an ascending broadening price pattern. And I was still, wondering if we were going to retest this upper end here around the 375. So I was still open to the fact that we might have a little bit more of a rally in here, but we are coming down one way or another. This thing is coming down by virtue of the convergence of these two bear price patterns. Now, I shouldn't be so dogmatic. That is not the case, because what I do is I size up these patterns and then I observe how the market trades within these patterns. And so if this starts like going through here, then it would bust or negate that pattern. And, I don't want to dig too much into the weeds. There is a lot that goes on into trading. But really what it comes down to is that I look at a set of pictures, price patterns and price action to set up risk reward trades in the market. And so if this acts true to form, meaning that this is a bear price pattern, the head and shoulders, the ascending broadening, we broke out of both of them. Assume we go back. If we make a new low, I know exactly where this thing is going to go to at least. And that is to the beginning of the pattern, about 260. So right now we're at 350. This thing could go down, whatever that is, 20% or whatever that represents. And I don't think that that is going to be an outlandish call. I think it's very reasonable that we could see something like that. So again, this is what I look at. This is why I put on a whole bunch of bets today that we were going to go down. Now, I shouldn't be celebrating. This thing could go straight up tonight and tomorrow. Facebook hit 249 and now it's 258. So it is bouncing. So, I just look at these patterns and then try and, make determinations of risk and reward based on these patterns. Now, I really shouldn't talk about options with you guys. Options are weapons of financial destruction. Most of them will expire worthless on you. You can lose 50% or 100% of your bet in a heartbeat. I was losing a lot of money on my bets. It closed higher today. And who knows, by tomorrow, this thing could, open back higher. Facebook is now rallying pretty good, although we'll have to see how it goes. But to me, this is what I'm looking at. This was the distraction. And I feel like eventually this is going to come down. So what I was betting at today, that was a weekly chart. So now I drilled it down to the daily chart. And now you can see that we had these key reversals here. So I look at a pattern, and then I look at I wait for certain days where I can understand. So you can see the double top and the head and shoulders. So this is your head and shoulders that you saw on the weekly. And you have this down sloping neckline that connects all the lows. And you can see how perfectly we snap back to that neckline. So this is what markets do. They break out, you get all excited, they snap back, and this could even go a little bit above here. But if this takes out this low, we're going to 260. And I think that this is telling you that's exactly what is going to occur. So once I feel like this is what I'm looking at, this is the pattern, I'm not looking at this noise. This is the distraction. And so I was cautioning you guys from, there was a bounce in all kinds of stocks this week, Roku and Zoom and Beyond Meat and all the dogs that got beat up, in the last 3-4 months ran a bit. But I said, if you chase that, you may not be able to get out before it comes flying back in your face. And so today what I was observing and why I started putting on put options here was that we had this key reversal. It made a new high during the day, and then we closed on the low of the day. So you can see right here, made a new low, made a new high, close on the low, and then it gave rise to that. So what I do is I have a 4-step trading process, and I put the strategy in the link of the chat box earlier, and you can, take a look at it there. But what I do is I start by looking at a trend. Is this kind of going higher or lower? So the short-term trend has been down. Is there a pattern? Yes, there's a double top, head and shoulders. Once I understand the trend, the pattern, now I feel like I need to watch out for, places where I need to take advantage of this thing going down. I want to find places where I can join this trade. And so I got in early because, with put options, you kind of have to anticipate a little bit. But really, the way I play this is that once I understand the trade, then I set up my trade. And I put a sell stop here, a pending order, a resting order, which requires the market to confirm what I'm looking at. So tomorrow, we could open all the way through here. I wouldn't suggest, chasing that right away. But and then putting a buy stop a little bit above here, a stop loss. So I start setting up, risk reward parameters based on what I'm looking at on the chart. Don said, can you repost the document? Yes, I will do that, John. So here is my strategy document, which has some scientific basis to it. It shows that once these patterns are formed, that the market goes in that direction for at least 100 days. So I think we have 3 months of selling ahead of us, at least, in the stock market, despite the fact that, we've been straight up for the last 3 days since I've been talking to you. So this is why I've had such a difficult time, presenting, because on one hand, I could see the market going higher. On the other hand, I knew that the door could just slam shut on me, if I made the wrong move. Now, if you're in Facebook, you're holding a very deep doo-doo bag. And I do a morning program. I don't know if anybody is in the, on this program who's in my boiler room. I've been saying all week that Facebook is in a distribution pattern. I said that, on Monday. I said that, so Duncan says, yes, he was there. So on Monday, I said, look, we're going to have earnings in Facebook on Wednesday, and Facebook is in a distribution pattern. So you have accumulation and distribution. What does a distribution mean? Distribution means that all these people have been selling. So while, the retail people and suckers have been buying based on the name change, based on this or that, the insiders have been getting out. And how do we know that? Because here is this funky, head and shoulders. Again, all these patterns replay the same head and shoulders we saw in IGV. Here you see it on Facebook. So this right up here is your cheat sheet. This is, what tells me what to do. So every time this thing rallies, I've been selling into it. Why? Because this told me that it's over, that there is a huge distribution pattern there. Now, if that wasn't enough, you've had 3 more patterns. So you had the head and shoulders here and the double top. Then you had a double top head and shoulders here. And then you had a head and shoulders here. And it all shared this neckline right there. And you can see all we did was bounce back and trap people. So if you chase this rally, guess what? You can kiss your ass goodbye, because you're trading down here now. So if you chase this today, this is where it's at. So the great Wayne Gretzky had a great saying. One day somebody thrust a microphone in his face and said, "Wayne, you're not the fastest guy out there. You're not the strongest guy out there. How are you able to, do the magic? How are you able to score more goals than anybody else?" And Wayne said the most profound thing that I think is so applicable to trading. Wayne said, "I don't skate to where the puck is. I skate to where it's going to be." And so earlier this week, when this market was going up, I started buying these put options right here, the 300 strikes, and I was losing all this money, and I was prepared to write off that entire bet. I didn't think it would even pay. I didn't put a lot of money into it. I paid like 5-6 grand, but I'm going to make 50. So, and I did that. I didn't know the severity of the sell-off, but I did know that these patterns, when you see these things, they tell you a story. And this is all distraction. That is noise. This is what I look at. So some people have asking about the morning program. It's called the Boiler Room. If you are interested in joining the Boiler Room, you know what? You're going to get an email from our team after the 4-day series telling you how to join. And then if you want to ask any questions of them, go and do that. This is really I'm not here to sell you anything. Appreciate you asking. If you are interested, let me just give you a link: support at the Pattern Trader. So if you want a recording of this, or you have any questions about joining up or what have you, you can message support at the Pattern Trader. So this is what I do. I just look at patterns, and patterns precede trajectory. So I've been sitting in this pound New Zealand dollar since late November. November 22nd, if you haven't been on this thing, here's kind of the email that went out to all of our members on our elite program, where I suggested they start getting in at 192.77 on the observation of a bullish price pattern. And then I followed up, say, get back into it. And now I'm looking at these kind of open profits in pound New Zealand dollar. So to my mind, pattern percent, even yesterday, we had a 200 pip sell-off in the pound New Zealand. And I said, that's a buying opportunity. Don't get scared. Don't hop out. Don't panic. This is a buying opportunity. And so you can see this is going straight up and will continue to do so. So I've been in this trade for 3 months, which is a lifetime in the FX market. And I would guarantee that if we get together 3 months from now, I'm probably still going to be in this thing. Now, how do I know that? It's just because the patterns tell me. Pattern precedes trajectory. So my whole approach is that I'm looking to take monster moves out of the market. I'm not interested in playing this game where I get in, 5 pips here, 7 pips there, 15 pips. I'm like a squirrel hunting for nuts, in and darting in and out of a tree. I'm looking to take a piece of the middle out of monster moves in the market. And the way I do that is I look at what I call a clean or naked chart. So you can see there's no volume here. There's no moving averages. There's no MACD. There's nothing here. There's none of what they call the indicators. To me, indicators are like driving, looking in the rearview mirror. Indicators are backward looking. The markets are a forward discounting mechanism. And how do we know where they're going to go? Well, there's a trend and there are patterns that tell us. Right here was what we call an even atom double bottom. You can see there are two pokes at that one support and a single one there. So it's actually called an even atom double bottom. But whatever you call it, it is this letter W. It is a double bottom. And what we look at for these patterns is to confirm. So I got in way down here at 192.77. Then I added it 196, and then I added it at 199. So I've just been adding, and right now making over $400,000 on this position. And that's how you make money in the markets. Not darting in and out, you know, looking for 15 pips here and there. You're just going to get taken out by your broker. I like to find trades that I can sit in it. The longer I can sit in a trade, the better that trade is. On December 20th, I think my last video of 2021, I made a little video for our members, and I said my prediction for 2022 that pound New Zealand was going to be the currency pair of the year. And right now it has not disappointed. We're 1 month into it, and this thing is just breaking out. So you can see here was really the breakout. And now there's just blue sky here. There's no resistance until 218. And I do think we will see that number. So, you know, this is, you know, my process where I look at patterns that equal trajectory. And, you know, I also look at them to keep me out of trouble. So if you're just if you're just looking at these short-term charts, here, let's look at the Qs. What you're getting smoked in the aftermarket. So they close. This is the regular session. It closed at 368 and it's trading under here. So what I'm saying is if you're looking at a 15-minute chart over the last, look at that. That's a beautiful uptrend. This is what most people are doing, right? They open up their chart. They're trading off short-term charts. And what we see here is a beautiful inverted head and shoulders and a nice uptrend. And so, you know, you get long and then all of a sudden it's down here. And so if you don't have enough history, how would you know this is going to end? I made all these bets selling it up there. Now, there's nothing off this 15-minute chart that would indicate that we would be there. But if you take it out a skosh, you'll see that there are these bearish price patterns. So I always say the markets are like a magician, right? A magician just doesn't come on stage and pull a rabbit out of the hat. He does a little, you know, distraction. And this is distraction. So all this week that we've been talking, this thing has gone higher, 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 and higher. I mean, I've been going nuts. I've been shorting this thing and it's been going up my ass for 4 days. And sometimes you start, you know, really doubting yourself. And then, you know, out of the blue, right after the market closes, you know, it's down here. So where's this? It's, what are we looking at? The Qs is trading at 352 or something down here. So no, 362, sorry, it'd be somewhere down there. But the point is that I wasn't chasing this rally. And I advised you on Monday not to do so either, because you could get really trapped. What I was looking at were these patterns here. We had a set of head and shoulder patterns. It cut through the neckline. We drift. We almost, sometimes you can come all the way back to that thing. But to my mind, we're going to go back down again. And we'll see if that, occurs. But that's why, most people are getting cut up in the market, because if you don't have enough history, if you don't know the cards you're holding, you don't know why the market comes out of the blue. And I said this, I said the market would just come out of the blue and just get banged. And I didn't want to just wake up, one morning and my stocks are down like $10 just because, I miscalculated. I try to get a little, sometimes I will do these counter trend rallies. I'll play this upside. But I was very reticent of something like this, where Facebook, is down $70 now in the post-market session. Ahmed says, is the Dow the same? No, the Dow is actually stronger, but it's also got a bear price pattern. So, these things, these short covering rallies, they can look hellacious. They can look very real and suck you in. But here's this pattern right there. So you can see we rallied right to that. So I'm not sure the Dow. So this is why I've been struggling this week. This is a very complex market environment. You've had a very bifurcated environment where the indexes are not too far from their all-time highs. But, stocks like, Peloton, I probably don't even have enough. I don't even have enough history here. Peloton dropped from 170 to $20. So while the indexes are sitting at their all-time highs because, Apple's sitting at the all-time high, all of these stocks like Zoom have gone from 600 to 150. QuantumScape went from 140 to 17. Beyond Meat went from 218 to 50. And I said this last February. I was saying since last February to short all of these stocks while the indexes were making new highs. So this has been a very complicated market environment. And so I would say this is not a stock market, it's a market of stocks. Because stocks like Beyond Meat are going down and stocks like Google are going up. And you have to really, you can't just blindly now, do something, buy an ETF or what have you. You really need to understand what it is you're doing. Otherwise, so now the index has been going up on the basis that the big stocks have been going up, but now the big stocks are starting to roll over. Amazon's got this double top. It's going to be interesting to see what happens here. I think we go lower. So this is Amazon. And I think that all of these recent rallies, are not going to hold. So there's your double top. I just look at a picture and you break through. Sometimes you re-challenge the break and then you go. So this to me is the governing pattern. What I mean by a governing pattern, it's gonna govern the trajectory over the long term. Now you'll get short-term moves like this and then it'll go down, then you get this, but it will go down in fits and starts. Now, I look at these pictures and you'll see these in textbooks, but the market is a whole different thing. Once you start getting the market, you'll say, well, this is a double top. And then all of a sudden the market starts going like this. And you go, well, Mark told me this was a double top. So what happens is if I see what I think is a pattern that should suggest something like that, and the market goes like that, I'm not going to say, well, I saw this in a textbook, it's got to do that. And it took me a long time to understand the difference. And so there's a lot of nuance in trading. I can't, share, all the bags and the tricks, but so Neil says, what about Tesla? So Tesla, I think, is also a giant distribution. The distribution means that people are slowly getting out and handing it over to the suckers. So this is Tesla. And just like we've been seeing on Facebook, there were all kinds of clues here. Here's a double top, head and shoulders right there. Here's a double top, head and shoulders there. Here's a head and shoulders here. So this is like Facebook. And we saw what happened with Facebook. So patterns precede trajectory. So when this thing's down by, at 500 bucks, and I do believe it's going to go there, people say, well, what happened? All these analysts were telling me it was going to $1,500. Well, this is telling me a whole different story. So you can see there's all kinds of volatility here, but I'm looking at this. So every time it rallies, I'm going to sell it. So now you have this, what I call an inside day bar coil. You can see that so now I'm looking at this major double top pattern. And you can see we broke through the neckline, and then, like I said, sometimes it'll come up above the neckline, and then if we go below this, you can kiss this goodbye. 800 bucks, you can kiss this goodbye. This will be at 400 bucks. And I do think that's what's going to happen here. So the markets are an extraordinary, place. And what I hear, I've got all these analysts behind me. Just my TV went off. Watch this stupid program behind me. You can see the chart of Facebook back there, plunging. Well, I listen to these goons all day long, and they're talking about price earnings and this and that, and especially with Facebook. Facebook was presented as the best value of all the FANG stocks. Its multiple was the lowest. So all these guys were saying, well, it's a 20 PE, it's a great company, we can get it cheap. People don't understand the market is a force. It's a force of nature. At some point, it just becomes wrecked, and it becomes beyond explanation. It will defy explanation. It will defy gravity. And so I think this thing is coming down like this. And why? It's the greatest car company in the world, blah, 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 blah. But the market is a force of nature. And if you ignore that, you'll wake up one day with all your money gone. Now, if you understand that, you can make money from all of this chaos. So the point is, I look for a pattern. So to me, this looks like there's a bunch of bear patterns. So despite the fact that Facebook went from 775 to 950, I think that this is a great selling opportunity. And so the way I would set up this trade, so this is what I call an inside day bar coil. You'll notice that the last 2 days, the ranges from high to low basically sit within the range of that range 3 day. So what that suggests is that the market had this short covering rally. So it fell out of bed, had this short covering rally, and now last 2 days, we haven't been able to make a new high. So we made a new high here. Yesterday, we couldn't make much more progress, and today we couldn't. So it's like it's trying to go high, and it's stalling, and it's like one of those, you ever been to one of those air shows where you watch those guys go straight up into the air? And then at some point, you just run out of gas. And that's what this suggests, that it's gone up like this, that skydiver is running out of gas, and then you're plunging down back to earth. And so the way I would structure or design this trade is I would put a sell stop underneath the low. So that way you require the market to confirm. So tomorrow, if Tesla opens up and goes down and then goes back up, now you're not put into the trade. So what I like is the market to confirm what I'm looking at. And it's probably already going through the lows right now, I would imagine. Yeah, so we're already plunging. We're down 15 bucks in the aftermarket. So it's already making a new low. So I would get short with the view that, this would be my risk up here. So that's my risk. And I think I could be looking at, a $500 reward. So that's basically what I do. So I'll take a few questions. I'm also going to share with you my book today. That will really articulate this 4-step process that I look at probably far better than I did. So what I'd really like you to, the questions to be directed about, the methodology. We can look at hundreds of charts here. Everybody will be firing at me to say, look at this and look at that. And if you're interested in that kind of format, every Friday at 11 a.m. Eastern Standard Time, I do what's called the underground trading sessions, where I go into the market live and we look at all of the charts. We look at all of the asset groups. We look at all of the FX markets, gold. And then there's a question and answer. And then anybody who asks me to look at a chart, that's where I do that. I'm trying to give you kind of a vision for how to apply a trading strategy using only price. And, I'm going to make multiple 6 figures in the 3-4 days that you and I have been together, just looking at nothing more than this. So somebody says, what is the aftermarket? So in stocks in the United States, certainly there is a pre-market and an aftermarket. So you can see that in the regular session, Facebook closed at $323. But there's an afternoon session that goes to, about 8 p.m. So about another, this will trade for another 3 hours. And you can trade in this market. You could buy or sell, Microsoft or Facebook right now. So I, use these earnings sessions to make bets on where something will go after the market, after an earnings release. And then we have an early morning session called the boiler room, where I will look at the markets ahead. So there's always a pre-market. So the markets will start trading, before the regular session. So I know a lot of people, and this is where I make all of my money, because there are enormous arbitrage opportunities. So, my whole philosophy is that the markets are energy. So if I see a market that's going to open lower, I see the Dow is going to open 300 lower, then I look at all of the stocks that I want to buy, and I use that lower opening to buy it in the pre-market, and then, the energy takes it up. So I buy on weakness and sell into strength. It's, sounds like a simple principle, but it works like a charm. And so we have an early morning program called the Boiler Room. If you're interested in that, I'm sure our team will let you know. So Yannick says, I'm a little confused. You talk more about sell stop. So I use pending orders to get in a market. I look for the market to confirm what I'm looking at. So sometimes we'll look at something and, instead of buying it right at the market here, or let's say I want to sell it. Let's say, for instance, I want to short it, and then, I short it there and it ends up going straight up. What I try and do is try and confirm. So what I do is I put a pending order, it's called a resting or pending. So it's just sitting there waiting to be triggered. And if the market doesn't get there, then it's never triggered. And that's kind of the beauty too, where you stay out of markets that, weren't going to go. So what I try and do is I want the market to confirm what I'm looking at. So, I know I'm suffering from early stage dementia or whatever, and I could be looking at these things and saying, this is a bear thing, but it could be something else. And then the market goes straight up. So what I want is the market to confirm what I'm looking at. So I'll strategically place a sell stop underneath the lows. And again, I'm going to offer you my book in a moment that will explain this in detail. So I will put a resting order there, and then I will put a stop loss behind it. So now this doesn't require you to look at the market. You don't have to stare at a screen and wait for some MACD crossover on a 15-minute chart to figure out when to get in. The market will put you in. So, you know, what I really like to see in cases like this, if I'm looking to go get short, I'm actually hoping that the market will go up first. And then if it comes down and triggers me, then I know that I'm probably on the right side. So now the market will put me in at the time and price that it's ready to go. So I will, you know, not waste like 3-4 hours sitting in front of the screen. I'll just put my order there. And then if the market comes and catches me, fine. And then all of a sudden, you know, I'll, you know, have a trade like that. So to me, trading should be effortless. Just put your orders in and walk away. Alan says, what program can I go to short stock? So any broker, certainly in the United States, should let you short stocks. Let me check out if anything's happening on YouTube. So John Marsh on YouTube says Zoom's down 6%. So yeah, that's what I was saying yesterday. Zoom and all these stocks are running. The dogs were running, but I didn't think that they would last. And so Zoom is just going right back into the trend. We were talking about this yesterday. You know, I said, you know, maybe we've got a short-term bottom. This is not sustainable. And I don't want to chase something and then have it just, you know, these headwinds in my face. So you want to surrender to the will of the market and get in the, you know, this is a down market. So yes, it will have, you know, a brief respite. Nothing goes straight down. But, you know, if I asked a 6-year-old, what is the direction of this market? I think, you know, he could pretty confidently tell me that this is a down market. So you want to find ways to get in this trend. And the way I find it is that I look at the reversals and I look at the inside day bars. So once you understand that this thing's in a downtrend, and then along the way, it puts on these patterns. So here's a nice double top. And then within the double top, you have this nice key reversal, made a new high, close on the low, put you into that trade. Made a new high, close on the low, put you in this trade. Made a new high, close on the low, bang. So, you know, every trade I open up, I say to myself, okay, what is the phase or the direction of this instrument? And it doesn't matter what this is. It could be natural gas or corn or the euro versus the yen. What is the phase of the direction? This is a down market. So you want to get in sync with this, the major trend of this market. And then I look for ways to get in sync where I look for these key reversals, and this way I can set up my trade where I can put a sell stop here, a stop loss there. That's my risk, and that's my reward. Can you guys see how powerful this could be if you understood this? Hamlin says, where can I learn and read to understand the bars rather than the candlesticks? So this is not really an understanding, Pamela. It's just a different presentation. And to me, I see the bars so much more clearly. You know, when you're looking at a chart like this and you've got all these candlesticks, you know, this to me wouldn't stand out as well. So that to me stands out. That made a new low, new high, and close on the low. That made a new high and close on the low. That made a new high, close on the low. So when I'm looking at this downtrend, I'm looking for these things. Made a new high, close on the low. This was right before earnings. I told our members to short it, and it opened down $50 after earnings because there was a whole bear pattern right there. So to me, bars are just a different way of visualizing, you know, what's happening here. And I always say you can't trade these reversals in a vacuum, meaning that right here, you made a new low, close at the high, made a new low, close at the high, indicated that there may be, you know, some support here. But this is where you want to be careful. You can't just fire at every reversal. This is still very much a downtrend. So Om says, can we short today? Yes, I think we're going down a lot lower. You can see that Facebook is just hugging the lows down here. What are the Qs doing? Qs are 362. So yes, I think we're going lower. I mean, I don't know how many more ways to say it. That, you know, to me, this IGV is telling me that we're going to at least 260 on this thing. So what do we close at 3? So we got 90 divided by 350, 25%. So people might think I'm mad. I think we're going to go down 25% from here. So, you know, if the question is, can you get short? Yeah, I think there's a whole lot left on the table here. I started loading up on these IGV puts. Where's IGV? It's at 346 bid. It's going to open it down about 800, 8 pips. So I start buying the 340s, the 335s that expire on the 18th. So I've got a lot of time. I think I'm going to make a lot of money on those. So Valentine says, Facebook has strong support at 240. I would not be a hero here. I would not be a hero and step in front of this thing. There's something that's getting broken in the markets, something that's very scary. And when you see stuff like this, to me, so you're saying 3-4. So where are we? 250. So yes, there is support right here. There is support right at where about 240. So yes, you're right. But to me, I said that the markets at some point are just going to defy gravity. I think these things could just fall out of the sky. And you want to see something falling out of the sky. So this was a darling of all these analysts all of last year. PayPal. PayPal was 320 bucks. Now it's 130 bucks. That's what can happen in the markets. Thing went down 50 bucks after earnings yesterday. So this is the kind of carnage that's happening in the markets, despite the fact that the index are saying that we're at all-time highs. So it's been this masking effect. And I think that this is going to be very corrosive. But again, it doesn't matter. You know, you overthink it. It's just the pattern. And you say, well, you know, how did this end up down here? Well, there was no magic. There was a pattern, just like Tesla, just like Facebook, just like there's a pattern that precedes the sell-off. Pattern equals trajectory. Matthew says, in the Forex market, how many pips below this thing is your sell stop? So, you know, just outside the high or low, you know, you can adjust for the spread. But look, I'm looking for the bigger moves in the market. So if your platform is, you know, a few pips off mine, it doesn't really matter. I'm looking for 300, 500, 1,000. I've got like, I don't know, 1,200 pips now in this pound New Zealand. So it doesn't matter if, you know, you're 5 pips off, you know, than me. So, you know, we had a key reversal today in the pound New Zealand, made a new low and closed on the high. So if you're really aggressive, you know, you could put a buy stop here. So it closed at, call it whatever. I'm not looking at my screen now. I'm saying around what, 204.83. So you can put a buy stop at 204.95, which is outside the high. And, you know, so that in that way, I'm looking for the market to confirm. So again, what I do is I look, is there a pattern or direction? So you have an inverted head and shoulders, which is a very bullish price pattern that suggests an upward trajectory. And if you look at the scientific study that I put in the chat box here, what it says is that once these patterns are made, it goes in a certain direction for at least 100 days. So if this thing's going to go up for 3 months, why am I looking to get out now? And I told you that even if we had a pullback, I would be looking to buy it. I wouldn't look to sell it. But it doesn't look like it's going to give you, many pullbacks or many chances. So the way I now get into new trades is that made a new low, close on the high. So we have a key reversal, kind of told you that the market tried to sell it down here, couldn't find any sellers, and now it closed and the buyers were in control. So what I would do is I put a buy stop there to leg into this trade and let the market confirm you. So, what could happen is today, it opens and goes straight down, and now you're not put in a market. And in this way, you don't have to watch it. You can put your buy stop in it, go have dinner, go ride your bike, and go about your day and let the market do the work. So, during tomorrow's session, it could come down here. All of a sudden, 2 in the morning when you're sleeping, it hits you into this trade, and then you just wake up and you're in a positive trade. So I let the market do all the work for me. And I just try and find ways to identify what's the trajectory, where's this thing headed, and how can I join it? Where can I get in? And, how much do I have to risk? Now, this is still in an area where it could bang through here and still come through here, and it could still do some things. So I always, suggest putting a very wide stop loss. If you're looking to own this thing, if you think this is going to 218, why squash it? Why get taken out by some arbitrary noise that then, takes you out? So sometimes I enter markets and I don't even put stop losses. I mean, that's when I'm really certain of what I'm looking at. And I don't want to give you guys some bad instructions here, but Rafat says, how can one join the elite program? So Rafat, thank you for asking. I put a link to our support, but at the end of this 4-day, at the end of tomorrow, I'm sure one of our team members will, get in touch with you. I don't do any hard sells. You're not going to hear me pound you guys to buy something. I make all of my money in the markets, and I started this business to give back. I love talking about the markets. I have met a whole second family. There's a lot of people on here that I've known for years and years on my different programs, and it gives me a gratification, way beyond trading. I've been doing this for many, many moons. And, I do it because I enjoy it, not because I have to. Douglas says, can you put a buy stop in and a stop loss? Yes. Yes, you can. So I'm not going to go through the whole thing. You put a buy stop there at 204.97 and simultaneously enter a stop loss there. And so now it's on your platform. You can walk away and you never have to look at it. So I've been sitting in this trade, from 192.77. Then I got in at 196, and then I got in at 199. And, I've been thinking about adding up here just because I think that it's gonna be a moonshot. And, I might just fool around and add a position right here just for the heck of it. Thank you, John. I appreciate it. All right. So that's basically what, I have to say today. It was a wild and woolly day. And this is why trading, it takes a certain confidence and knowledge. So, everyone says, well, trading's so risky. And my comeback, my retort is always, risk is a function of knowledge, right? So if I needed a heart transplant and I went, across the way and asked my neighbor to carve my chest open, that would be a pretty risky endeavor. But if I went to Michael DeBakey at the Houston Hospital, who's an expert in this thing, then it's less risk. So risk is a function of knowledge. So what you guys should be doing is looking to acquire the knowledge to take advantage of monster moves in the markets. So with that said, I'm going to share a link now to my book. This will, I don't know what just happened here. This will actually, give you an insight. And the great news is it's a pay what you want. And that's exactly what it means. So you decide what you want to pay. You plug it in here. $5, $10, $20, whatever it is, and whatever you decide you want to pay for this knowledge, I will personally double this amount and donate it to my favorite charity, the American Childhood Cancer Organization. Yeah, I did plug it in here. Let me just, okay, did you put it in? Yeah, you put it in the, I don't know if you did. I'll put it in YouTube also.
Yeah, it's in YouTube.
It's YouTube. Okay. So, you know, if you decide you want to pay $10 for this book, I will take that amount and double it, and I will send $20 so that you know, A, you're getting this information, and B, you know that your proceeds are going to a worthy organization. I've donated over $34,000 in the past several months to this thing. So whatever royalties I get from my books, I just double that and send it to these guys, and they send me sweaters and cups, and they get messages from the kids, and it's very rewarding. So it's my way of giving back. So I lose money if you buy my book. So Dean says, thank you for teaching us how you earned your chops. So yeah, I always used to say, you know, I've written books on the market, check books. I've, you know, taken a lot of poundings, and, you know, through all of that, you know, hopefully something sets in, and it's my way of kind of giving back to, you know, the world, if you will. So some of you are making some great remarks. Thank you very much. Antonio, you're welcome. Thanks, John. So John says he bought it. Zigmars, you're welcome. Okay, are there any other things you'd like to discuss, or any questions you have? Nicholas, you're welcome. Zigmars, you're welcome. Charles, no worries. Pamela says, where do we find out about the other programs that you offer? You can message our support team. We have a website, thepatterntrader.com. You can check that out. I don't do any selling on these programs. I really don't even know what we do, what we offer, how we offer it. I have a whole team that does it for me. And if you're interested, they'll contact you after this webinar, and you know, they'll answer all your questions. So I'm not here to pound you guys to buy anything. AJ says, when will the replay come out? I don't know. You can message our team, support at the Pattern Trader, if you want. So Vladimir says, when you look at the QQQs, do you also look at the NASDAQ? They're really one and the same, Vladimir. The QQQs are an ETF that mirrors the NASDAQ. So if I showed you the Qs, which are these, and then I showed you the NASDAQ, you wouldn't be able to tell the difference. It's the same thing. So the Qs are really a proxy for the NASDAQ. So when I buy the Qs, I'm making a bet that the NASDAQ's going up. When I sell the Qs, it's a bet that the NASDAQs are coming. It's just another instrument to take advantage of the movements in this index. Jan says, I've learned a lot, so good on you, Jan. Duncan says, can I advise all who are not members go straight to the elite program to advance your life? Duncan, thank you so much, man. Appreciate that endorsement. We also have, you know, some of you are reticent, you know, you've never met me before. You know, understand there's all kinds of crap on the internet about, and a lot of you have been burned. We get a lot of people who've been scammed, which, you know, I hate. And so this is a link where you can check it out. And tomorrow, you know, if you want, I'll ask you for a review, but you can, you know, check everything out, see what other people have to say about it, and what have you. So Ricardo says, do you think the best thing is to learn the patterns? Yeah, so I handed out the strategy thing. And to me, you know, patterns precede trajectory. So, you know, the markets go in one direction, and then all of a sudden, out of the blue, they go somewhere else. Like today, Facebook. You know, tomorrow people will wake up and go, what happened to Facebook? It was just 323 bucks. How did it get there? Well, it didn't just get there. there was a whole bunch of patterns that were setting up for many, many weeks and months, telling you that people were getting the hell out of this thing. And, you know, it's the last guys, the retail guys, to know that. So markets just don't come out of the blue, right? So this was, you know, looked like very random, looked like a coin flip. You know, this could go up, could go down. But to my mind, and I told our members on Monday that Facebook was going to announce on Wednesday and it was going to sell off. And the way I knew that, I shouldn't say knew, that's pretty arrogant and stupid. But I had a good sense that that double top, head and shoulders, this told me the whole story. So what's happening here has, you know, was a consequence of what happened over there. And that's the problem. Most people are trading on a 15-minute chart and they're looking at this. They're looking at this and going, where the hell did this come from? Well, it came from that. So it's just like anything else. If you don't know your history, you're bound to repeat it. And that's the problem with the world today, but I won't get into that. Nobody really cares or understands about history, and history has consequences.
Hey Mark, I don't know if you catch this question, but someone was asking in the Q&A if you still think BABA is bullish.
No, I had a stop loss on BABA, and I probed that market, got stopped out, and got rid of those trades, and went on to the next one. So what I do is, you know, a constant probing, you know, of the market to feel out, you know, if something, and I was pretty reluctant, captive, and this is why I was saying all week, I don't feel comfortable, you know, being long anything. You know, sometimes we think we see things. There was a bit of a pattern here, but there was also very much of a bear pattern there. That to me was probably more overwhelming than anything. So, you know, you've had all these bear patterns on the way down. So this thing looked like it, you know, was catching momentum, but the minute, you know, the minute something doesn't work, and that's what I was saying about, I look at the patterns and, you know, I think it, but if the market starts doing something that, so my expectation is with JD and BABA that if they were going to go, they should have just, you know, opened and gone. If this was, you know, a bottoming pattern, you know, if something bottoms, it should go. If it falters, you know, then, and this was, you know, this didn't come up to the neckline. So it really didn't, so this wasn't confirmed, right? So this isn't a bottom yet. This would have to come up here to 140 to actually make this thing a bottom. So sometimes I'll probe things, I'll play around with certain things. Sometimes they work, they don't. I got out right on the opening. I could see this was not happening. So I got out of JD, I got out of BABA, I took small losses. You know, I got them at, you know, somewhat better prices, and I just smoked them. And then, you know, incrementally over the day, as this thing went higher, you know, I just, you know, started looking at the price action in all these stocks and said, you know what, I just, you know, it's time to get short. So yeah, no, the trend is down. The price action, you know, is not following through, and this still looks pretty bad. And if you look at on the weekly, you know, we're in this kind of thing, but this is just a very negative pattern. This was the pattern that told you that we're coming down. Now, sometimes you'll get a bounce out of these things, and I'll go for a ride on what I can call counter trend trades. I try to take a nibble in here. It didn't work. I took like $1, you know, loss on it, and I got out. And now I'm making all my money in pound New Zealand and Facebook, and, you know, my short trades in IGB. So, you know, you probe around things that don't work, you just get rid of them. And then the things that do work, you know, hopefully are of a much bigger magnitude than those that don't. I mean, you can see that I was in some losses here. It's not reflecting. So you can see that I was losing. I took a shot on selling the Dow. I was losing, you know, 6,500 on this. I was losing 2,500 on these NASDAQ, but this does not reflect the aftermarket now. which has not picked up this loss. So I just probe around, and get rid of the things that don't work, and then the things that do, should be make up for all of the losses along the way. What do you think about PayPal? I think it's history. I don't think you should play with atom bombs like that. Tyrant says, so for the coming 3 months, should we be looking at shorting the majority of stocks? Probably, but there's a time and place, and sometimes you'll have, huge counter trend rallies. So when markets have short covering rallies, those are some of the most hellacious rallies. So you can, lose a lot of money shorting, right? So there's a time and place for everything. Because like we saw this week, we just saw huge. So, Coinbase went from 160 to 200 bucks. What is that? 40 bucks, 20% move. 20% move in 3 days off the bottom here. So you can't just like arbitrarily just say, well, I'm just going to short. There's a time and place and a way to get in these trades. And the market, tells you that, frankly. So you can see how Coinbase just stopped perfectly along this trend line. And it looks like Tesla now, where you kind of have this inside day bar coil. So you can see how we just came right up against here and just couldn't bang through. And now you're failing. So this looks like a double bottom. And this is why certain patterns, you'll see certain things, they'll look a certain way. And I was wondering, Coinbase, this looks like a bottom, but I don't trust the market right now. I don't want to get long anything. And so I think you could put a sell stop pending order under Coinbase, 180, put your stop loss there. And I think Coinbase and cryptos are probably going to go a lot lower also.
Mark, another question from Pamela. Do you buy stocks to hold for long-term investments?
Yeah, when I see them, right now we're in an environment where I'm very skeptical of buying anything. But there are a whole bunch of like value stocks, like Deere, Dow. I was looking at Dow's kind of broken out. But I'm just very skeptical of buying anything. I really, there's a time and place for everything. And trading is also about what is the environment, especially trading stocks. What is the environment? So for the last 18 months, you had a very friendly Fed that's been largely accommodative. And so you could have just bought anything. And so that the environment was just riding that wave. Now the Fed is, now in your face. They're taking away the punch bowl, and the environment is now changing. So now I'm really skittish that even if I see something I like, I don't want to wake up tomorrow and it's, back in my face. So I'm not really buying anything. I mean, I was looking at Boeing today. Boeing has this, has a setup that ordinarily I would take a shot at. And I might still take a shot at Boeing on the long side. Boeing has, this even atom double bottom, and then you have this coil. So this is what I'm talking about, this inside day bar coil. And to me, this is just building energy, and the energy should uncork in the direction by virtue of the pattern. So, with Boeing, you could just put a buy stop above today's high, a sell stop here. And if this is real, it should take off. If it's not, it's just going to die. And then, you won't be put into the market. So, Boeing is, I'm kind of looking, is this inching out a bottom, or is it just going to be back in my face? So the dailies look good. And this is where sometimes the different time frames look different, where the dailies look like there's a bottom, and then the weeklies I see kind of, these lower highs. So you can see Boeing's been in this perfect thing, and I don't know, we may make it to the upside of this channel again. So Boeing is kind of a tough one, and I don't know. I look at all of these reversals here. And it kind of tells me that, this is still going to go back down. What do you think of crypto? You guys don't want to hear. I don't understand them. I don't know what they are. But they're a price just like anything else. And I think they're going to get hit just like everything else. I think we're going to get an asset contraction. We're going to get a multiple contraction. And, all the things that people have been playing for the last 6 months, I think people are going to get really hurt if they don't understand that this is not an environment where you can talk about PEs or the 10-year yield. People talk about the yield all the time. This isn't about yield. This is about liquidity. So this is the 20-year treasury, and what this tells me is a pretty scary story. So this is an inverse relationship. So when treasury prices are going down, interest rates are going up. And just like, I can read anything on a chart. It can be, an interest rate instrument, what have you. And what this tells me is that this looks extremely bearish, which means what? It means that rates are going higher. So if this comes down here, it means rates are going up there. So to me, people look at the 10-year all day, it goes from 1.7 to 1.8. They're not understanding the story. This is about liquidity being taken out of the system. This is a system that has gotten drunk on leverage. And now when you take away the punch bowl and there's no liquidity there anymore and the window's shut, then you get a PayPal situation or a Facebook situation. And I think, this is what you're conceivably looking at in the stock market. You could have a drop of an unbelievable magnitude. So, if you've got money in a pension or this or that, I don't know, man. I think that, all hell is going to break loose. And I've been thinking that for a while, and I put on huge bets today, positioning for that. So you can see this is the Qs, the weekly. They've been going up 2 weeks in a row. I'm so tired of watching this go in my face. But to me, this was the pattern. So this is the distraction. This is where you get caught with your pants down, when it's like that. And you go, where did that come from? Well, it came from the pattern. Pattern precedes trajectory. So now I'm looking at this NASDAQ. It's, I don't know if this is an ascending, broadening. It could be. Yeah, it basically is. So we kind of had this trap. We broke below this thing. Now it broke up. And so it's going to be very interesting to see how we play out here. I don't know if we still go back up or what have you, but if this thing starts curling back down and certainly taking this out, then, we could come all the way back to here. And I think that's what could happen. All right. Check out my book. I will see you tomorrow, 4:30 Eastern Standard Time. Take care.
All right, Mark. See you
Thanks,
tomorrow.
Dwight. Thanks.